Hi everyone, I'm Josh Spurrell from Spurrell and Associates, Chartered Professional Accountants, and we're here with our show Ask Spurrell CPA, and we're helping businesses beat the odds through planning, reporting, and analysis. And today we're talking about bookkeepers and hiring a bookkeeper and how you know if you have a bad bookkeeper. Does that even matter? What happens to a business? And here with me today is Cindy Goss from Always Bookkeeping. Thanks very much for being with us here today, Cindy. So Cindy, why don't you tell us a little bit about Always Bookkeeping and what's important to you guys?
Well, first of all, thanks for having me, Josh. Always Bookkeeping, always up to date, always ready to make decisions. Pretty much automated bookkeeping services that really keeps you on your toes, and bookkeeping that works for you while you sleep.
Right on. So I think you had some questions for me today on, what from an accountant's perspective, what do we see with bookkeepers, right?
Absolutely, Josh. So as an accountant, do you advise your clients to hire bookkeepers?
Yeah, I mean, a bookkeeper can be an absolute necessity for business owners. Ultimately, in business, there's decisions, and there's no reset button on decisions. It's not a video game. If you get the wrong decision, you're out of business sometimes. And the way we make those decisions is you need to know your numbers. Mm-hmm. And sometimes when you wait till year-end financials, sometimes you're going to end up making a decision in the interim that the year-end financials, although they might be great and they're perfectly reliable, they're not in time. Mm-hmm. They're not. The decision has to be made mid-year. By the time you get those year-end financials, we're talking about information that might be 18 months old. So when you're deciding to hire a new person on or fire someone or buy a new piece of equipment and can you afford it, you need quality interim records that your bookkeeper can give you.
Well, that kind of answers my next question. When is the right time to hire a bookkeeper, Josh?
Well, that's actually still there tends to be one really good differentiation factor. And it's when you start hiring employees who are real employees, not just the family members. You haven't just hired, your spouse or your kids. We're actually hiring arm's length employees here now. And the reason for that, there's a twofold reason for that. Number one, payroll rules, they're fairly complex, as you know, Cindy.
Absolutely. And
business owners get themselves into trouble and they forget that a late payroll remittance, you give it 1 day late, all of a sudden it can be 20% more. You had to pay $10,000 on Wednesday, and on Thursday it's $12,000 if you messed it up. Keeping current on those source deductions and paying them on time is so important. Having the payrolls or records organized so you can issue the T4s, that's so important. The other thing is when you actually get those arm's length employees, that's when really the business has generally scaled beyond your ability to look at bank statements and establish, did my cash go up? Did my cash go down? Now that asset test, sometimes business owners can reach that asset test before they have an employee. Mm-hmm. But I would suggest as soon as they reach an employee, now they're at the point where they definitely need it. So before then, it's more of a judgment call. It's dependent on the business, the owner, the industry, how well they feel that they're keeping track of it. But once they hit that point where they have an employee, I've just seen too many businesses try to do it themselves and just not succeed at it. So I would suggest that's your point where you got to look at when I have an employee, I for sure need one at this point.
Okay. So where would you start looking for a bookkeeper?
It's a tough go to look for bookkeepers. I've known you for a long time. I know Always Bookkeeping gives great service. So, feel free to check these guys out. But other than that, you want to look at your referral network really. So your referral net, if you can get a referral from someone who actually has a trusted bookkeeper, someone who's been in the business for a while, someone who has resources behind them and who has a team behind them. Mm-hmm. There's a lot of people who just set up shop one day and say, I'm a bookkeeper. Unlike being a chartered accountant, there are some professional bookkeeping designations, but there's more people who have no designation and they just put up a shingle saying I'm a bookkeeper, and they're just one person who may or may not have the experience that you want. So you look at someone who has longevity, someone who has resources and a team behind them. Even myself as a CPA, 2 CPAs are better than one. For to bounce ideas off each other. So I would look at your network, and you're really checking references, and the longevity of those references is probably the crucial thing there.
So maybe ask other associates, business associates in your same field.
Ask other business associates. I mean, an accountant is in a fantastic, position to advise on a bookkeeper, because ultimately the accountant is the final check. They're the exam marker, if you will, right? They're the one making the adjustments at the year end, and they know, did I make 50 adjustments at year end, or were these records clean and I made 5? So I think accountants are in a fantastic position to make that referral as well. So.
Okay, so why can't they just do their own books? I mean, it's just pretty much expenses and revenues, right?
Yeah,
anyone can do it.
Yeah, I think a lot of that comes from the software manufacturers. They've really put some of the software programs out there, making you think that I can just enter my banking credentials and everything will magically come out the other side. And maybe in 50 years we're going to be having that discussion. That might be a little more realistic, but from what I've seen right now, the automated software is fantastic. It's a fantastic start, but you need a professional to organize that, or else the records are generally not, they're not worthy of making really significant business decisions. And again, there's no coming back from these business decisions. It's not a video game. There's no reset button. That's just not going to happen, right? You hire someone at the wrong time, or buy a piece of equipment at the wrong time. You run out of cash, and it's game over. Right? So.
Well, you're an accountant. Can't you just do the books?
Yeah, I mean, you could think that the accountant can do the books, but again, it comes to the timeliness of the information, especially if they're running payroll. Like sometimes it's so difficult to go back 12 months and find, you ask someone, hey, what did you do 12 months ago? I don't know. I don't remember what I did 12 months ago, but yet I'm asking my client what they did 12 months ago. And again, in a solopreneur, and there's very few transactions, maybe they can do that, right? But now they have employees, and they have twice as much activity coming through, and they just don't have it organized. And trying to go back and answer a question what happened 12 months ago is much more difficult than answering, every month or every 2 weeks. You're answering some information about, what happened 2 weeks ago. The business owner can generally just rattle it off right off the tip of their tongue, and they're not even going back to it. So, you look at the options. Do you have an accountant do it? Yeah, sometimes that's appropriate. But again, going back to if they have an employee, it's probably not appropriate anymore. It's probably going to take more time, and lots of times that accountant's time is going to cost more than the bookkeeper's time. Can you? So you get the accountant to do it. You had a problem there. If you get if you do it yourself or have a family member do it, lots of times they're just so inefficient. It's like I once changed the transmission in my truck, Cindy. I did it. It took me a month, and a mechanic probably could have done it in a day. And that was a time in my life when I was younger and I had more time for stuff like that. But sure, you could probably, and I was lucky that it turned out. It could have easily just as fried. But in that case, I was only out of transmission in an old truck. But in terms of your business, if you do it wrong, now you're out of really significant, your life savings are on the line. You've put years of your life into this thing, and you're using those numbers to make decisions. That's not somewhere to, I don't think it's the right place to utilize the family help. Normally, you can get that family member and scale them, use them to help you generate more revenue. It goes back to side topic, but generally you don't have an expense problem in your business. You generally have a revenue problem. And if you got helping hands, you're probably more qualified to teach them in the field that you're operating in. If you're used to selling guitars, you're probably more likely to be able to train your sister how to sell guitars than as a guitar player to be able to train your sister how to be an accountant. Yes. It just doesn't make it's not as efficient. So
no, absolutely. Okay, so we've established that it's important to have a bookkeeper.
Yeah.
What are, I mean, you've touched a little bit on this already, but more of the benefits for a client that uses a bookkeeper?
They get that quality of information in a timely manner, and they're able to stay focused on their business. You know, you have so many tasks that you can do as a business. If you can offload a couple of those tasks so you can focus on what you do best, what adds the absolute most value, that's really what's going to help you. It's the ability to, you know, free up your time that you can do, you know, what you do best, really.
I couldn't agree more. Okay, now you as the accountant, having clients that have bookkeepers, what benefits do you see with your clients having a good bookkeeper?
Well, I mean, ultimately, like our business is budget driven, right? And when we get a client and their books come into us in shambles, we're spending our budget on assembling records and, you know, data entry type tasks, and then the amount of time that we have available for the planning to help them save on their taxes or give them advice on how to improve their business, it becomes limited. You know, it's only a finite. Clients don't come in with an unlimited budget. They come in with, you know, the realistic price that they can pay, and we got to give them a service that they can actually afford. And if they come in with clean records, you know, we can actually do what we do best and give them planning and advice rather than, you know, sitting there with our Excel spreadsheets all day and doing data entry.
Makes sense. So what can happen on the flip side? What if you've got a bad bookkeeper?
Well, I think the worst case scenario is you make a bad decision. You think you're making $10,000 a month, and really you're not making anything. I'll go with an example I had in the past. I had a client, and he had inventory, and the inventory was a stone. The stone came in slabs, and he installed it in people's houses. And his bookkeeper thought it was a great idea to value the inventory at the same price once he cut the slab in half. So you have these slabs, and when you put the slab on a countertop, it was worth full price. But the minute you cut that slab in half, it was worth 10 cents on the dollar, the stuff that you left away. So they would have a slab that cost $500, cut it in half, and assume that they could sell the other half of the slab for $250, that it was still worth the same, and it was virtually garbage if you could dispose of it. So the client made, you know, significantly bad business decisions, and, you know, really dug themselves into a hole because they thought they were making money because that they weren't expensing the full slab that went into the project. So, you know, they hired more staff, bought more equipment, couldn't afford to pay the bills, and wondered why the cash ran out. So that's kind of what happens.
Scary.
Yeah, it can be. Payroll is the other bigger one. We touched on that before. It's really common for business owners to get really far behind in payroll or GST, and CRA they're just not friendly when it comes. If you get behind on your taxes, that's one thing. If you get behind on your payroll and your GST, they view those as trust accounts. They view that was never your money to begin with. It better be there, or, you know, we're gonna freeze the accounts type of thing.
Wow.
Yeah.
So, besides your bank account getting frozen, what are other red flags, I guess, to watch out for with your bookkeeper, or what can spark you to realize that you've got a bad bookkeeper?
Yeah, great question. So, you could have the discussion with your accountant. How are the books? You just ask them. It's a scale from 1 to 10. You know, you're hoping for a 7 or above type of answer, right? The probably never going to be perfect because the accountant wants to think they're perfect, right? So some accountants are like that a little bit, but you're getting a 7 above. That's a good indicator. I think the timeliness too. If you're continually waiting for updates, and if you're supposed to get a monthly update, or you're supposed to get a quarterly update, and this update never comes, well, probably nothing is getting done. And when it does get done, it's probably getting done in a rush, and it's getting done in a disorganized manner, and the records probably aren't as reliable as you think they are. So I would look at the timeliness of those reports that comes through. Does it make sense? I mean, you know, when you get an answer, is it a simple explanation that you can understand? You know, I think it was Einstein that said that, you know, if you can't explain it simply, you probably don't understand it well enough. So if your bookkeeper can't explain it to you and you don't understand it, there's a good chance that it probably is not the right answer. So you start to look for those timeliness anomalies. Is there concerns from your accountant, or is there just things happening on your income statement and balance sheet that you just don't understand? Would be a good one. Another one is if you could drill into your adjusting journal entries. If you drill into your adjusting journal entries every year, you say look back a year or two, and every year the first entry that they make is to adjust opening balances to actual. If you see that in there and you see that every year, that means what happened is the bookkeeper didn't take the accountant's entries and make your records look like the year-end financial statements. And so then you always have these two sets of books, one book that's right, that you're getting at year-end, and the other book that's an interim book that you're probably making your decisions on that's wrong. So you could look for those 3 or 4 things.
Thank you. Very good information, Josh. Thanks.
Right on. Okay, thanks very much, guys. We hope to see you guys next time, and if you have any questions, we look forward to seeing your comments below.